Welcome to the daily online seminar. My name is Charles Masal. I'm the host of your daily online seminar. Today we'll be talking about how you can get rich trading the Forex market. Actually, people have asked me, can I get rich trading the Forex market? This has been a huge question that people have been asking me over the years. And yours faithfully, myself, I've been trading this Forex market for several years now. My first time into Forex market was actually in 2003, yeah, and that's where I started in my university days, and I started learning. Not until 2006, 2007 when I started trading the Forex market with my own money. All the years from 2003 to 2006, 7, I've been demo trading. Somebody will ask me, what is demo trading? Demo trading is actually practicing how to trade, understanding how the market works. So all through my undergraduate days at the university, I was actually demo trading, not until 2007 when I left the university, before I now put my own real cash into this business and start making some money. Yes, I made loads of mistakes, lots of learning, lots of curves here and there, lots of mistakes here and there. But long and short, 2007 till 2011 is 14 good years I have been running this business, and it has been awesome. So asking me, can I get rich trading the Forex market is actually, it's not a yes or no answer. There are so many things that need to be considered for you to actually be successful in the business. Before I even answer that question straight head on, let me actually explain what this Forex market is all about. You might be hearing Forex trading, and here and there over the TV, television, over the radio, over the internet. You've been seeing lots of people saying lots of things about the Forex market. One thing I want you to understand that the Forex market is a genuine market. It's a genuine place that financial institutions and organizations trade in this market. So let's go straight into what Forex is all about. The word Forex actually stands for foreign exchange. So the foreign exchange market, which is about FX, is a market for exchanging foreign currencies. Forex is the largest market in the world, and the trades that happen in it affects everyone. It actually affects everyone, everything from the price of clothing in China, and also to the cost of chocolate while you're vacationing in France. So Forex trading has to do with buying and selling all over the world, currencies all over the world. Guess what? Every day, as large as $6.5 trillion exchange hands in the Forex market. That is the biggest financial market in the world. Would you want to get involved? Would you want to be a player in this kind of market where there's a lot of volume of money that exchange hands on a daily basis? It's a market that will actually operate 24 hours in a day, morning, night, morning to night, 24 hours in a day. It's a market you can take advantage. Actually operates 7 days in a week, Monday to Friday. Saturday, there's no trading on Saturday in the currency market till Sunday night by 10 p.m. when the market actually resumes trading. Now, you might be asking, what actually moves this Forex market? Now, we need to understand some basic Forex trading. What actually makes the currency market prices to move? What we are doing as Forex traders is analyzing the relationship between supply and demand. Simple. What we do basically as traders in the market is to analyze supply and demand and supply. That is basically what you do. What is happening in the market? These are things you need to understand for you to trade this market successfully. Now, for you to trade successfully in the market, there are currency pairs that you need to understand. They have different currency pairs. Governments, banks, companies, and individuals need foreign currency every day. Every day, organizations, banks, the government, individuals, they need foreign currency. This might be for business, buying of stock or traveling overseas or the bank hedging. For different purposes, individuals, companies, organizations, and the government actually need foreign currency. And that is why the Forex market, like I told you, is a genuine market because it has to do with the daily trading in the world, around the globe, around the world. So people always trade this currency. Now, this currency, if you look at my screen, you can look at here, you can see that they're always in pair. This is Euro JPY. Euro is paired against the Japanese yen. Okay, this is Euro against the US dollar. This is the Great Britain pound against the Swiss francs. This is the pounds against the yen. This is the pounds against the dollar against the Canadian dollar. That's the US dollar against the Canadian dollar. This is the US dollar against the Japanese yen. Now, these are paired. These currencies are paired against each other. It is always quoted in pairs. That's what you need to know. I want to explain what I mean by it is quoted in pairs. Like from this explain from what you are seeing here, you see that they are always in pairs. They are not traded alone. So because one currency is being bought and another one is sold, you say because one currency is being bought and one sold, exchange rates are always quoted in pairs. When trading Forex market, we are always concerned with currency pairs, not just a single currency pair. They're always paired together. Now look at this example here, Euro USD. What does this mean? It means this Euro by the left-hand side and the USD by the right-hand side means the Euro is the base currency. The base currency, and the base currency is always one. The base currency is always one. What this means is that we're using $1.15395 to buy 1 euro, which is the exchange rate between the dollar and the euro, the dollar and the euro. Yeah, you see, what it's telling us here is that the market right now, that you can sell 1 euro and buy about this number of dollars. This amount of dollars is what we use to buy 1 euro. Don't forget, I told you that the currency by the left is the base currency, and the base currency is always equals to 1. So in this currency pair, it means 1 euro equals to $1 point, let's say approximately 1.5 cents. $1.15 to buy 1 euro. This is the exchange rate in the marketplace. The base currency and the quote currency. Good. So the price of the currency pair is always quoted using the same convention, and the first currency is the pair. The first currency in the pair is the base currency, and it's always what 1. Good, you can see what I'm saying. While the second currency is the quote currency. Now look at the Euro USD. The Euro, by your left-hand side, the base currency, while the USD is the quote currency. I hope you're getting it straight up now. In the Forex market, there are different trading that actually happens in the Forex market. And this is what I want to explain to you, for you to understand that there are different currency pair that you can always trade on. We have the major currencies. We have the cross currencies that you need to understand, that we always that we can do understand. Let me show you what I'm trying to say. Now look at this. We have the major currency. These are the major currencies. The major currencies are Euro USD. We have the USD JPY. We have the JPB USD, USD. All of these currencies you can see here, we refer to them as the major currency. These are the main currencies that have been traded in the Forex market. While we have the minors, these are one also that they are traded, but not as the major currency. You can see the GBP and the Mexican peso. We have the Singapore dollar and the Japanese yen. We have the euro and the British pound. We have the euro and the Australian dollar. We have the pounds, GBP pounds and the JPY. And all of this currency here, we refer to them as the minor currency. They have been traded likewise very well, but unlike the major currency, if you look at the major currency, these are the pairs that people trade majorly in the Forex market. This is what you know. So we call them the majors and the minors. Now, in the Forex market, there are things you need to understand that basically happen in the Forex market. There are several things that happen in the Forex market that there are two basic things that happen in the Forex market. It's either the market is bullish or the market is what? Bearish. When we say the market is bullish, we mean prices are going up. Prices of these currency pairs are going up. Or when we say the market are bearish, we mean prices are going down. Now, let me explain to you in more details about the bullish and the bearish market. Now, look at it. You say, if you think euro is likely to increase in value against the USD, that will mean that the price you're seeing quoted will go up. So you now know how a currency pair is displayed. Now look at it. Like I was explaining, this is all about how they move upward and how the price go. I say a bearish market has to do with prices going up. That's a bullish market, while a bearish market when prices are going down. That is just basically what the bearish and the bullish and the bearish. And many times when the market is going up, is going bullish, we long, that is we buy. And when the market is going down, we sell, that is we go short. These are some terminology in the Forex market that you need to understand. Now, in these currency pairs, there are things that actually happen. I would like to explain to you. You see, this is more of a theory I'm explaining to you, but I just want you to have a general overview about the Forex market and how it works and it operates. If you understand how this works very well, it's going to do you a lot of good. So I want to explain to you how this works now. Let's see. Good. We're talking about the bid and the ask price. Look at the currency pair again. Look at this euro AUSD paired like this again. The bid and the ask price. This is your base currency. This is your quote currency. Don't forget that. Now, this sell side and this is your buy side. This is your sell side. This is your buy side. And your buy side is always higher than your sell side. So the quote is always higher than the base. Always know about that. Have that at the back of your mind. Now we have the bid and the ask price. This is the bid and this is the ask price. This is the bid side and this is the ask side. So if you look at this situation, you see the bid here is what? 1.1292, while the ask is 1.9293. There's a difference of like 1. That difference is what we call spread. We call it spread. Spread is the difference between the bid and the ask price. The spread is the difference. Look at the spread is the difference between the bid and the ask price. What differentiates two of them? If you look at this currency pairs here, you can see the sell side and the buy side. If you look at it, this is 1.61003. This is 1.61121. You can see there is a difference. Look at this currency pair. Look at them very well. You'll see that there's a difference between the sell side and the buy side, the bid and the ask. Now, this is what we call spread. This is actually how the broker, the Forex broker, this is how they make their money. It's just like the Bureau de Change. When you go to the Bureau de Change, when you go to their bookie out there, the Bureau de Change, what they buy from you is lesser than what they sell to you. You understand? So what they sell to you is higher, is lesser. So that's what you should understand about the Forex market. So the spread is difference between the bid and the ask. Now we have the PEEP. The PEEP is actually price movement. We call it point in percentage and price. Point in percentage is actually the movement in price, how prices move. As we go on, you'll be understanding some basic things. Now, I would like to see how to analyze the Forex market. There are two analyses that we use to analyze this Forex market. The first one is what we call the fundamental analysis. Now, this fundamental economic analysis, this has to do with this has to do with the market activities. What do I mean by market activity? We're talking about the short term, medium term, long term. These are some factors that affect, economic factors that affect the Forex market. This has to do with like short term. We'll talk about short term, talk about interest rates, talking about volatility, market sentiment. It has to do with the market, what's happening in the marketplace. Why the medium term has to do with geopolitical risks, economic growth, employment situation, fiscal policy. These are what government policies actually, how it affects these currencies. And also long-term analysis, look at terms of trade, purchasing power, and also parity. Now, the fundamental analysis has to do with what happens in an economy, government policies, basically demand and supply. What happens? Interest rates, housing, transport, exchange, name it. These are things that actually affect the Forex market. So to tell you that Forex is something, it's not a scam. Forex is what happens to you and I. Forex is what happens in the marketplace. That is why interest rates, tax, housing, transport, food supply, and every other thing that happens in the economy affect the Forex market because it has to do with about demand and supply. Now, the next one is the technical analysis. The technical analysis is all about using charts and indicators like you can see on my screen. You can see they're using charts and indicators to actually determine the trend of the market, looking at the previous trend, price trend, and using it to forecast the future price and trend of the market. That is basically what the technical analysis is. Now, we have like types of market orders. We have stop orders and stop limits. These are limit orders. These are market conditions that actually help to for you to enter the market now or in the future. Maybe you do your market analysis and you feel this market will not, you look at the current price of, or you do your analysis. The good thing about Forex is that you can enter the market in the future from now, being that price might be at a particular point now that you know that at this point, at this price is going to go higher or is going to go lower, but you feel for your analysis, you see that you can enter at a later price, either higher or lower. So you can use your market orders to enter at a particular time you need. Not to get you confused, to progress, maybe in our next video, I'll get more practical. I'll be showing you how this actually works. Good. I believe you've been enjoying the training. You've been enjoying this seminar today. So don't forget, this is a daily online seminar, and I still remain your host, Charles Marcel. And we're talking about can you get rich trading the Forex market? For you to trade the Forex market, you need the MT4 platform. The MT4 platform is what makes the market, that provide the market. These are Forex brokers that provide the market for you to trade. And one thing I want you to understand is that for you to be successful in trading Forex, you need to open an account with the Forex broker. You need to start by demo trading. Demo trading means practice trading. You practice for some time, for some months, for you to understand the workings and everything, how the market operates. They actually give you a virtual money that you can use, a practice money you can use to start trading, start practicing. And with that, as you practice that, before you know it, in no time, you'll be so good in the market. One thing I need you to understand is that Forex, millions of people around the world, both government, both banks, institutions, organizations, individuals like you, trade the Forex market. Forget about the negative things you have heard about Forex. When you learn it, don't give anybody your money. Learn how to trade it yourself. That is the secret. Don't give anybody your money. Don't give any investment company that have been scamming people and running away people's money all over the country and the world. Don't give anybody your money. Learn how to trade this Forex market. Once you understand how to trade this Forex market, the sky will be the beginning for you. Learn it, learn it. People have been learning. I learned this for years and I got to understand it. This paid me. My very first car I bought, Forex gave me the money. So, and from there, it has been upward, upward, and forward. You can also do the same. In the next Forex class, I'll be breaking it down how you can we'll go practical on how you can get involved in all of this. But if you think you want to learn this faster and you need more information, all you need to do is to comment in the comment box, in the comment section below, and I'll see it and I'm going to respond to you. Don't respond to anybody that says he or she is going to help you to invest or in one robot or in one stock. Don't do that. Learn the technical know-how, learn the skills. If you arm yourself with these skills, there's a lot of profiting to be made in this market. Don't forget, this is a $6.5 trillion daily turnover business. How much can you make from this amount? It's a question I'm asking you. How much can you make from $6.5 trillion daily turnover? How much is for yours to answer? But for you to earn anything, you need to arm yourself with the right information. And that is what I want to do for you. All you need to do, comment below, ask your question. I'll be glad to answer you. Do have a blessed day. I still remain Charles Marcel, the host of